stuff that we don't really know enough about. Gabby Dizon, thank you so much for joining us. He's actually straight from workout, it looks like. So before the lockdown started, Gabby Dizon and I were gym buddies, so we were going to the gym 3 times a week together, and I guess now we just do Zoom calls. So yeah, it's a different world, guys. Okay, so let's get started with kind of what happened last week. So if you're new to the Bloomcast, the way that the show works is we'll do a little bit of news at the start. Then we'll do a technical analysis of what happened during the market over the last week, and then we'll do our main feature. And in case you didn't see it, the main feature this week is going to be yield farming, and exactly what that is, exactly how that works, and all of that stuff. So okay, there's only one news item this week. I'm gonna just switch to share screen right now, and it was this little news item. So I guess I'll just read the headline. Virus pushes Philippines into recession with the worst GDP plunge on record. So if you can't see the chart is the really interesting part about this. That's what that looks like there. I mean, it looks like an altcoin chart, with how low it is. So the exact number is -16. Which is the largest drop we've ever had in any quarter that we've ever recorded in the history of this country, which is a pretty big deal. Now, if you go back, let's just look at the industries that were most affected by this. No, so you've got manufacturing -21%, construction -33%, transportation -59%. I guess those are kind of what you would expect. But what do you guys think about this? Like, a lot of traders were wondering beforehand about what kind of effect this would have after they actually announced it. Because if you remember, before this, we weren't officially in a recession yet, not officially. But now that the government has said it, now I guess it's kind of official. So thoughts, guys, like do you think that this is going to have any major effects, or was everyone kind of expecting?
I like you, I thought the peso would get weaker, but it's gone the other way. So if anyone can tell me why.
Actually, the stock market the stock market even is rising now. It's green. I thought it would,
Well, yeah. So with the peso, I heard that it's because our imports went a lot lower, right? So we didn't need to sell pesos to buy foreign currency. As to, I can't verify that, but that would make sense.
For sure. Yeah, for sure.
But, if you compare other countries, like a lot of countries owe quite a lot more as the national debt, etc. So Philippines was actually quite good over the last 10, 20 years, right? But maybe it's going to change because we're borrowing quite a lot for the COVID stuff. So I don't know if this is going to carry on going for the next 6 months, but it's good for me because I'm going to be taking pesos out of the country. But
you can stop advertising that now, Mark.
No. But if I'm bringing money back in, then it's not so good. Not so good for foreigners going there.
Yeah, let's look at those numbers again. Transportation -59%. I guess that was pretty obvious, no? Because no one's traveling, no one's moving around. Apart from Grab, the motorcycle service, not the car service. There's not a lot of stuff going on there. But yeah, right before we started, Justin shared this news item about how the peso, comparatively to Thai baht, the Indian rupiah, the Indian rupee, I should say, and then the Indonesian rupiah, we're doing better against the dollar, no? And all of the other currencies are doing worse. They're like as low as 5% below what they were trading at back in January. Whereas the Philippine peso is plus 3% better. And Mon, you were saying that, and I actually agree with that assessment, no, na The reason why that is because we're not buying as many dollars because we're not importing as much. Pero I mean, you got to imagine that it's the same for these other countries, right? I mean, surely they're also going down with their imports or something. I don't know. That's what I thought. Anyway.
Yeah, I mean, there might be some countries, and I'm far from an expert to know which ones they are, but there certainly are some countries that rely more on imports. Let's say even to survive, right? And if they rely on imports to survive, they're going to have to keep buying dollars to stay alive, even if that means their currency goes down. But there will come this balance, right? Like it can't go down too far, because what ends up happening is or can't go up too far, because what ends up happening is the other side ends up becoming very profitable. So take this example. Let's say if the peso keeps going up, then it'll be cheaper for us to start importing. And that's what we're going to do. We're going to start importing more, right? And then exporting less.
Is this Filipino peso against the dollar, but then the dollar's losing value worldwide?
Right.
And we import a lot from
we're just talking
China.
about nominal, just the nominal terms, not like the absolute value. Like, I guess if you wanted that, you'd measure it against gold or something.
Gold is on an all-time high right now, right? I mean, so everything would be going down against it. Justin, this was your article. What were your thoughts on this? Like, what did you think? Does this mean? Is it because of the importing thing? Huh?
I think that's one of the things the article mentioned. But the other thing that it mentioned compared to the other Southeast Asian countries there was the fact that Philippines has a lot of OFWs that are still propping up the country, the peso. So there's still that sort of liquidity demand for USD because it's coming in. And that's probably going to be a couple more quarters before, if this continues, this sort of like global lockdown continues. But to the point of the other panelists, the dollar the peso is stronger because I think even before lockdown or just as this whole pandemic started, a lot of people accumulated USD thinking that it was going to be the same. Well, still kind of is, but everybody bought in bulk USD and it kept going down. So now everybody's a little bit more wary of whether to pick up USD right now. Because
so where'd you put your money? Where'd you put your money? Pesos, obviously, sometimes.
Well, Bitcoin, right? That's where you put it, right?
It's a crypto show.
Silly question.
I mean, most of my money is in Bitcoin Cash, so I'm kidding. By the way, that's a joke. Okay, all right. Any further thoughts on this? I mean, it was really just kind of an interesting little tidbit, I thought.
I mean, what are the implications, right? You had that. Yeah, I mean, exactly. I mean, I think this is a no-brainer. Like, we're just going to see continued, like, because of the GDP drop, we're going to see continued lowering of interest rates, which means that interest rates everywhere is going to get lower. And I've already seen that with a few companies that borrow money, their rates are now low. So
in Europe it's minus 25, and the UK they're considering going from 0.25% to 0 or -%.
That also
give your money to a bank and they take some of it.
Yeah. No, the bank has to pay to keep the money, so they want to lend it out. Yeah, so
they'll pass that on. Or here in the Philippines, so your interest rates for your bank deposits are going to go even further down to like 0.0005%.
Oh my God! Wow. Okay. All right. So just to kind of provide some contrast to that, I thought this was quite interesting. That of all of the sectors that did kind of okay in Q2, it was agriculture. So for some reason, farming has somehow it says here Philippine agriculture manages to grow despite the crisis, lifted by higher production of crops and fisheries. So it sounds like people are eating more. But more than that, I thought it was a funny counterpoint because this show is this episode is about yield farming. So this is kind of like, just thematically, like it seems like all sorts of farming is better than normal stuff right now. At least, right now anyway. So
maybe we're importing less food.
Yeah, for sure, right? Yeah, we're importing less food, therefore we are actually consuming local goods. I certainly like. I know that like we talk about this all the time, right? Like we buy our coffee, our all of our the stuff that we used to kind of like import. We're just buying it from the supermarket now, and in my case, I'm buying a lot of like coffee startup products. And I guess that if there's enough people who are doing that, then yeah, sure, it's helping out, no? So just quick reminder, again, one of the reasons why we're doing this episode right now is because it is Southeast Asia DeFi Week. And from yesterday until Friday, until next Monday, I should say, they are going to do daily episodes interviewing some of the founders of the projects that are here listed. No? So Compound, Aave, Balancer, et cetera. So if you want to learn about this stuff directly from the founders of those projects, you can watch the Southeast Asia DeFi Week is a Malaysian production, but it's completely in English, so that's fine, naman. And if you want to catch any of the episodes, just type Southeast Asia DeFi Week into Eventbrite, or even here on Facebook, it'll show up immediately. I watched one of the episodes yesterday. It was pretty informative. It helped me formulate better questions for this episode because I was coming from almost zero. And it seemed like it was important to have a little bit of working knowledge naman kahit papaano. Okay, so I guess we could get into the main part of the show now. I wanted to start. Yield farming is part of a greater part of the crypto industry called DeFi, decentralized finance. I wanted to read two really quick quotes lang, just to give you a sense of where we are with DeFi. So this one is from a Decrypt article. The hype around DeFi is seemingly unstoppable. Link's trading volume on Coinbase, so Link here is Chainlink. Link's trading volume on Coinbase has surpassed Bitcoin's, standing at $140 million, while Bitcoin's was just $95 million. On Binance, Link was close behind Bitcoin in terms of trade volume. So this is over 1 day lang naman, no? So this is not like, over a long period of time. But, the fact that Chainlink, which is, unless you're pretty familiar with DeFi, you probably wouldn't know what Chainlink was. It's not in the top 10 for sure of cryptocurrencies by market cap. But yeah, it's here. And it's getting pretty big. Here's the second excerpt. And this one was kind of insane. This one, I will definitely need to ask you about this one, Gabby, because I don't understand these numbers. So YFI, this is Yearn Finance. 6 days ago, the price was $34. Today, the price was $3,000. And I looked it up this morning. It's actually more like $6,000.
Yeah, it's around 6,000 now.
Yeah, so this guy is saying this may be the fastest 100x in the history of crypto. I'm pretty sure it is. I'm pretty sure that like 6-7 days is the fastest I've ever seen anything do 100x. And it's actually 200x, no? Because it's actually at $6,000 right now. Here's a little bit about YFI. One of the reasons, or do you say Wi-Fi?
You call it Wi-Fi or Wi-Fi. Either one.
Yeah.
Okay.
Wi-Fi.
All right. Yeah. Okay. So the reason why the price has gone up so fast is because there's only 30,000 tokens. And then, so the current price as of this morning was $6,400 per token. Small market cap. Just to kind of give you guys a sense of what's happening with the DeFi space right now, no? And this is one of the reasons why we wanted to talk about it, because it's definitely getting big, although I can't exactly explain why. And that is kind of why we want to talk a little bit about it. So our subject matter expert is Gabby Dizon, because he's been doing this stuff on a personal level. I imagine because like I feel like you probably
personal
know.
level.
You're not using company funds on it just yet.
No.
Okay. Sige, why don't we start with quick definitions lang muna? What is yield farming? The audience knows naman what DeFi is, but what would you say the simplest way to explain yield farming is?
So I like to see it as a supercharged form of staking. So it's allocating your funds, which is usually but not necessarily stable coin. Putting it as a liquidity provider to help bootstrap the liquidity of a certain coin in a decentralized exchange, and then staking that pool that you have, that amount of the pool, to help receive basically an airdrop of that new coin in return. So it's basically incentivized liquidity pooling. So if you want, I can kind of unpack that, because you can basically say you stake it in the liquidity pool and you get an airdrop. But there are actually several major components in DeFi that kind of lead us to where we are today. So the very first one is the concept of vaults or CDPs that are popularized by Maker. It's also available in Aave. So it allows you
CDP?
collateral debt position, but now they just call it vaults right now. Yeah.
Okay.
So it allows you to kind of to put up your cryptocurrency as collaterals. For example, Ether or Bitcoin or other collateral, and receive stable coins in return. So usually the max that you can borrow is up to half the value of what you put up as collateral. So they call it an over-collateralized debt. So if I put up $1 of Bitcoin, I can only get 50 cents in stablecoin. So this allows me to do things with that stablecoin while basically still exposed to the potential price gain or loss of my original cryptocurrency. Because in the past, if I wanted to, for example, do a stablecoin, I would have to sell off my Bitcoin or Ether for a stablecoin, which is great for stability, but I would lose any upside potential. So with a vault position, I can basically keep my Bitcoin or Ether. So for example, I put up $10,000 as collateral. I get a maximum of $5,000 of stablecoin, which I can put to work on different things, whatever I want. So I can turn that into...
What do they do with the Bitcoin that you've just put in the vault?
Okay, so that's collateralized. So if you breach the 50% the ratio, you basically get liquidated. So it's usually recommended that you borrow well under the liquidation ratio, so that if the price goes down, you don't get liquidated immediately.
Okay, wait. So let's start from the first start. So I have one Bitcoin, and I decide that I want to do something with Tether. Is Tether one of the ones that
usually USDC or DAI. So let's say for simplicity's sake, that a Bitcoin is $10,000. So it's easy for us to compute. It means I can borrow up to $5,000 of stablecoin. But if the price of Bitcoin goes down and I go beyond that liquidation ratio, that of basically around 1.5, I get liquidated already. So I want to borrow somewhere below 5,000, so that if the price of Bitcoin goes down, I don't get liquidated with my collateral.
I've had so many questions. I don't even know where to begin. Go ahead,
so let's say I want to buy a car, right? And that's about $5,000. So instead of selling the Bitcoin I have, what I can do with this platform is essentially lend it to the platform. And then as collateral, I'll get $5,000 in some stable coin. I'll be able to convert it to pesos here to buy a car. But if the Bitcoin price drops to to the amount I borrowed, then it will be sold, and I essentially lose
cover
the
your
Bitcoin.
to cover your debt position basically. But if you are betting that the price of Bitcoin will go up, so basically you're still exposed to the upside, then it means that it's cheaper in peso terms to repay your debt, right?
Most people
Right there.
borrowing.
What are the terms
Oh yeah.
You're borrowing stable
of your
coin.
repayment? So when you have to repay, is that between you and whoever
Yes,
is
that's
lending
right.
you?
So basically, you have to repay the debt in full
you
to be
can
able to
say-
get your Bitcoin back or your Ether back.
And those terms that you repay, does it have to be the lump sum of what you borrowed, or can it be in
You can
tranches,
repay
monthly, weekly?
anytime to kind of reduce your debt ratio. So that means lower chance that you get liquidated, but you only get your collateral back if you pay it in full.
So most
Okay.
people are borrowing right now to buy more crypto. That's the usual cause of borrowing.
Yeah. So
Yeah.
So the first use case of this was, for example, I put up Ether as collateral in a maker vault. I get DAI, which is a dollar stable coin. I
Yeah.
sell that DAI for Ether, which is basically me taking a long position. And if the price of Ether goes up, I can convert back to DAI, and basically it costs me less Ether to pay back my loan in DAI. That's the original
Would it have to
use
go
case.
up? Would it have to double? It would have to double in price.
Well, not necessarily though, because as long as the price of Ether goes up, it costs less to pay back the DAI loan, right?
That makes sense.
So
Okay.
that's what they call. I mean, is that how margin trading
Yeah,
works? Like
exactly.
a margin trading in Bitcoin,
Yes.
for example.
So it's
Yep.
basically a long position, but you're kind of doing it manually. But that's
Right.
kind of that is the, I would say, base interaction for where yield farming begins.
Okay,
Sorry,
sige.
Gabby,
Okay.
Why would you margin trade manually like this versus just going on an exchange like BitMEX that offers margin trading? Are there network fees that are cheaper or things like that? What is-
Maybe there are different things that you might want to do with your Ether. You might want to buy NFTs. You might want to buy, for example, altcoins. I think probably the most common one is you want to buy an altcoin.
I see.
Yep.
So you
Okay.
have more use.
It's like
Yeah.
gambling, borrowing to gamble, essentially. And with
Well, that sounds
Putting up
pretty
your
smart.
house. Yes.
well,
Yes.
I'm just saying what it's like, But in BitMEX, you don't have control. Again, you got centralized control of your Bitcoin,
Yeah.
whereas this is totally decentralized, and you don't have to worry about someone running off with your money.
Yeah. So the
okay.
price feeds are Oracle based for
Okay.
all of this, which is where projects like Chainlink come in, because Chainlink is a decentralized price Oracle feed that you can get for different things. So Aave, for example, is powered. The price feeds are powered by Chainlink, and many
Okay.
others.
Okay.
Okay, and a decentralized oracle is basically someone that looks at the price. I don't know. Let's say I look at the price on some website, and then I report it to whoever is on Chainlink
Easy.
also, something like
Yeah.
that.
Yeah.
The
And because they
Chainlink
pay
token
me
you
in
can
link.
incentivize
They pay me
that
in link
actually.
so they can read my
Yeah,
feed.
yeah.
Yeah.
Correct.
So,
Yeah.
so I have a question about you mentioned Bitcoin, because I'm a Bitcoin guy. If most of this happens on Ethereum, right?
That's correct.
How do you move your Bitcoin into Ethereum? Do you have to wrap it? How do you do it?
Yes, you have to wrap it. So what I've done is to basically buy wrapped Bitcoin with my Bitcoin.
Can you explain to the listeners what wrapped Bitcoin is?
Okay, so wrapped Bitcoin is a synthetic version of Bitcoin that lives on the Ethereum chain. So it's backed 1-to-1. It's not, I would say, completely decentralized, because there are entities that keep the Bitcoin and issue the wrapped Bitcoin that represents.
So it's under custody, right?
It's like
It has to be.
USDT. It's like USDT or USDT, but for Bitcoin.
That's right.
Okay.
But it allows you to keep your Bitcoin exposure and basically play with it on the Ethereum network.
Okay, so let's review where we are just from an understanding perspective. So I happen to have some crypto. I want to use it as I want to borrow a stable coin, maybe DAI, and I want to use the crypto that I have as my collateral for it. So I go to is it something like Compound.finance? Is that where I would go?
Compound, Maker, Aave, those are the three largest ones.
Okay, got it. Okay, so I would go to, let's say, Compound.finance because I guess that's the most well-known of them. And then I would vault, put my Bitcoin into a vault, and then extract whatever 5,000 DAI, and then I can use that for whatever I want. That's basically the most simple version of this. Okay.
Yeah, that's correct.
Where is that 5,000 DAI coming from? Who has given that to you?
People like me who want to lend it.
So, so if you are on the supply side, you are basically receiving an interest that is much higher than bank. Yeah.
Okay.
So for example, if you are supplying, you might be getting somewhere between, just for example, 4 to 8% interest, sometimes higher. And then, of course, when you have, when you're borrowing, it's higher. So, yeah.
Okay.
It depends
I actually have the
kind of depends on the day.
Page.
Okay, that's good.
I have the Compound page here. Let's look at some of these numbers. So if I was the borrower, I guess I'm looking here on the left side, the supply market. Because this is where I would see how much I would pay. So if I wanted to borrow USDC, it would cost me 2.34% annually. Correct? Is that? Am I reading this correctly? Okay, and then
you'd be lending it at 2.34, and you'd be borrowing at 6.22.
Yeah, there you go.
Oh, sorry. Yeah, I got that backwards. Yeah, you're right. Got it. So yes, if I'm borrowing, it would cost me 6%. Wait. What?
Yeah. Borrowing at 6.22%.
Yeah. Okay. Right. That wouldn't make sense otherwise. Got it.
Yeah.
Okay. Cool. Right. Okay. Okay. So you're right. So depending on what the currency is, there's very different rates.
All right.
Like
That's right.
Ether is only 0.12 here. And then why is Ether so
well, basically, the more volatile it is, the less interest you give.
Right.
And I would say the more established the market cap is, also the lesser interest you give as well.
Okay.
So because Ether is the most established and it's the least likely to probably fail among all of these capital that you're supplying.
Yeah.
That's why the interest is very low.
Okay. So there's Wrap BTC right there. So
I'm not earning very much. If I lend it, I'm not earning very much, 0.5%.
Yeah.
But you get to gamble, Mark.
Yeah.
Is that what you're looking for, Mark?
No, if I'm lending, I don't want. That's not gambling. I want to lend it and get the most amount of bang for my buck, as it were. So I'd be better off buying DAI than lending.
So depositing it as collateral is the same as depositing it and getting an interest. So it's the same thing. There's no difference.
Supply. Yeah.
Okay. Right. So
there are some questions, by the way, because it's a complex topic, so people have been asking some questions.
Oh yeah, this one. I think this one was pretty important. What is Oracle? Okay. So this goes all the way back to the blockchain problem, no? So an Oracle is a source of data, right? That's the most simple way to explain it. So for example, if you needed to find a source for the correct rate of US dollar to PHP exchange rate, you have to find a trustworthy source. In the real world, that's easy. You go to xe.com, you go to Google, right? And you just look it up and it's fine. In the blockchain world, you actually need to have formal computing resources called oracles, and their job is to produce trustworthy, verifiable data. That other projects, they can use that as the basis for making decisions. So the reason why Chainlink, the Link token, is so valuable is because that's a platform for oracles. Right? Am I explaining that correctly?
Yes.
Yes. Yeah. So the platform for oracles, this is where all of the data sources can go to show what they've got, and then the people who use that information, I believe they have to pay for that information using the link token, and that's kind of the reason why there's an economy there. Is that still correct? Am I still kind of explaining that properly?
Yeah, from a conceptual level, that's correct. Yeah.
Okay.
Yeah, but this whole chain link thing is the point is to decentralize oracles, right? Because if we were to use a centralized oracle, then that's
you'd have the same
easy.
problem as real
Correct.
life. Yeah.
That's correct.
So what's happening there is that it's a free market where some oracles maybe are offering cheaper data than others, and then or something like that. Is that what's going on there? I don't really know.
I haven't looked into how the decentralized oracles are done too deeply. So let's just say what it does and not go too deeply into how it works.
Sure. Sige. Fair enough. So an oracle is a source of data. It's a source of truth, I guess. And that is usually related to something in the outside world. Because you need something to actually get the information from outside and turn it into something that a blockchain project can use. So that's why oracles exist, and that's why Chainlink exists, I guess. Mon, did you see any other questions in the chat that we need to
No, I think that's okay so far. Yeah.
Yeah. Well, it says here, please give specific examples that we can understand. It's hard to get. Yeah. It's hard to get.
So the basic job of the oracle is look for a price. How much does something cost? Right.
Again. Yeah. Right.
And it's available in the blockchain for you to query. Somehow.
Yeah.
Like you don't ask a website.
And Compound, Aave, they do not contain the information themselves on how much things cost. So they have to query an oracle to basically get, how much is Bitcoin, how much is Ether right now. So that's the basic explanation we can get.
Got it. Okay. I think that's probably enough for now. Because honestly, the oracle stuff is kind of that's not even the part that's making DeFi or yield farming so profitable. Yeah. So that's actually. So I guess this is the part that I really struggled with. Okay, so Compound, based on what we're looking at here.